Hello, everybody. Welcome to today's webinar brought to you by Kenanga Investment Bank and managed by Wellford. Today, we are very excited to be doing you this topic that is titled Live Chat with Protect Group Bhd, Spearheading a TED-led Insurance Proposition. So good evening, everyone. My name is Shen Chu. I'm the moderator for this session. Now, following the reopening of international travel, TUNEPRO with strong presence in ASEAN and Middle East will be able to capitalize on the travel recovery as well as the pent-up demand for travel insurance. So today, we are very excited to have invited the senior management of Protect Group to join us in this live chat as they share with you more about their business model, their growth drivers, as well as their financial highlights. So disclaimer, whatever I share in this webinar is only for educational purpose. So in no way that will give any recommendation for you to buy or sell any listed companies, any listed securities that we mentioned here. So if you decide to make any investment decisions, you're 100% responsible for all your investment risks. All right. So are you guys ready for the senior management of TUNEPRO? All right. If you're ready, maybe you type ready. Okay, let us know if you are ready for this. Let's make it as interactive as we can. All right. First up, we are going to invite the Group CEO of Protect Group Bhd, Mr. Rohit Nambiar, to join us to present with us the Protect Group business model as well as the growth drivers. Without further ado, let's invite Rohit.
Hi, Shane. How are you doing?
Yeah, I'm doing great. And you?
I'm good, Shane. Thank you.
All right, fantastic. So you may go ahead and share your screen.
Okay, give me 1 minute. Share screen. Can you see my screen, Shane?
Yes, fantastic.
Great, thank you. Hello, everyone. I'm excited to be here with all of you on this day, and it's good to talk to the different people on Protect. A little bit of background on Protect for those of you who may not know about Protect. Protect is a listed holdco company on Bursa. We are a holdco. We have several organizations within it. In terms of ownership, AirAsia owns 13% of the group. Tune Group owns another 15%, 15. CIMB Bank owns about 10%, roughly, plus or minus. And then we have other investments and retail investors. We actually have presence in Malaysia. We have presence in Thailand with direct insurance companies. We have a digital facilitator business in Middle East, which is growing very well. In fact, the business has grown 6 times in 2 years during COVID. We have a reinsurance business, which is one of our most important business. Which is a lifestyle reinsurer, which today can operate in more than 30 countries, which has growing presence in countries like Vietnam, and I'll talk about it. And very excitingly, we have a tech business, which is called White Label. It not only services TuneProtect, but today has 3 paying clients outside of TuneProtect. The reason why I'm giving some of these examples is many times we are looked as an insurer, and you will see that later in the deck. We are not an insurer. We are an insurtech company. If I may say, with all due respect, that we are the only insurtech in Malaysia, only true insurtech in Malaysia, because we have all 3 businesses: insurance, reinsurance, and insurtech. So comparing us with traditional insurers may not be fair to those large insurers, and vice versa to us. And for that reason, you would have seen in Q4 last year and in Q1 this year, very high growth, which again is reminiscent of insurtech organizations and the disruption we do. Moving on, all disclaimers apply. So I shall move on. So as an organization, I joined in October 2020. We had 3 broad challenges as an organization. We had heavy dependence on travel insurance, which is not bad per se, but we had to diversify the group. Our expense ratios were quite high. Many a times people told us we have an expense problem. Our problem was not expense. Our problem was we weren't growing fast enough and we weren't retaining enough business. In insurance, for those of you who may not be from insurance, retention here is not renewal. Retention here is how much business I keep without passing on to a reinsurer. In our case, we were passing on too much to the reinsurers, which meant we couldn't manage our expenses because the denominator was too small. And that's why you will see we have moved towards a new strategy. And the third part was we just had to diversify the group much faster. So we came up with a new strategy in I can hear some people might talking. Can you mute them if possible, Shane? Yeah, thanks, Shane. Okay, if you look at our commitments, we said we want to be a lifestyle insurer that everyone loves. What does lifestyle mean? Lifestyle essentially means following the lifestyle of a millennial or zillennial. Who is a millennial? Millennial is someone who's born after 1982. Zillennial is someone who is in the 20s, as you know. Why are we focusing on them? Somebody who's 50 years old is not going to think of TuneProtect. There are insurers who've been here for 70 years and 100 years in countries like Malaysia, Thailand, Dubai, etc. And clearly we can't compete with them in the traditional business. So that's why we have to go behind a different customer group who are more open to digital. And what study shows is they find insurance complex, they find insurance expensive, and they find insurance not really trustworthy. So that's why our motto has been, we will follow their lifestyle. What does their lifestyle have? Their lifestyle has 3 parts. First one is health. They're very health focused, Instagram generation. They want to travel. COVID, no COVID, they will travel if you allow them to. And the third one is they all want to become entrepreneurs at some point. There's a very entrepreneurial culture in today's generation. So SME. And that's why we came up with 3 areas we want to focus on, which is lifestyle, which is travel, PA, home, those kind of products. Then we have health, and then we have SME. And we focus on products which are different to the larger one. If you ask me, you want to buy the most comprehensive health insurance in town, I will give you some other company's name. But if you tell me you want the most optimal insurance in town, then TuneProtect is the place to come to. In terms of our commitments, we have 8 commitments that we have given for 2023. At the beginning of 2021, January. And what we have done, every quarter we give an update to the market on how we have progressed against those commitments. So commitment number 1 is retention of, we want to retain upwards of 70%. Our retention moved 5 percentage points last year, close to 5 percentage points. In the first quarter alone, it's moved 6 percentage points. And how will our retention improve? I noticed somebody asked in the question as well, and how do you manage risk? Our retention will increase because we are focusing purely on retail businesses. When you say retail business, it essentially means higher frequency of claims, but lower severity, because we are no more dealing with the large oil rigs and those kind of businesses, where we basically are just a fronting organization. And in terms of managing risk, it doesn't make any sense for us to become what we call essentially a glorified reinsurance broker by essentially fronting business which goes to other people. So that's why we have specifically been focused on doing business which we believe we can do, and that's where the business growth is happening. In terms of managing the insurance risk, obviously that's why we are focusing on retention on retail business, because business like travel, home, motor, PA, etc., the risk can be well managed through different methods, and it's something we can actively manage. And these are the segments which, as we mentioned before, our customers are looking for. These are the segments where we believe we can digitally disrupt and we can compete better. And third, most importantly, all these three segments today are profitable for us. They are creating under net profit underwriting, net positive underwriting contribution. So as our expense ratios get better, these businesses will create more profit for the organization. So you will see that if we get out of commercial lines, which we are going to do next year, so we are already exited quite a bit this year, and next year we will be completely out of large commercial low retention business. There'll be a little bit of flow through from this year to next year, because for example, we've written business in May, it will flow through till May of next year, but otherwise we won't be doing any new business next year for commercial large retention. We have started informing all our big clients that we won't be renewing your business. But I have more than replaced that with our growth we are seeing. And you will see, if we get out of low retention business straight away, achieving the 70% won't be an issue. And that means a higher denominator, which means our expense ratios will improve significantly. Our net written premium in Q1 this year was the highest since 2016. And many of you will remember 2016 was the so-called glory years of Protect, because that was the time when you sold a travel insurance with every AirAsia ticket. Times have since changed, and we've got back to that level. And this, if you look at Q4 last year, we grew at 34% in Malaysia. Q1 this year, we grew at 37%. And we have generally mentioned that internally that we plan to grow between 25 to 33% on NWP over the next 2 years. I have already indicated to the market that I expect it to be the higher end of that range that I had mentioned last year, depending on the growth we have seen in the first 4 months of this year. And you can see the growth is coming from everywhere across the board. Moving on. We had a pretty successful rollout of Tenang PA Care, which you all know is a B40 plan, which is funded by the Ministry of Finance. We had 9.7 million business in the first quarter in Malaysia. The best part is this is where our tech came to party, right? We were able to cover 120,000 people. It will be much more in Q2. Our front-end system, the market, a lot of partners have come to us from other companies because they find our front-end system to be one of the best. We've tweaked our system. We can issue 500,000 policies in a day. So the tech is quite advanced, right? And you can compare our tech with some of the best insurtechs that you would see in the market. Okay, let's move on. Our NWP contribution from digital partnerships has gone up from 29 to 39 million. But I think there's a larger story here, very compelling story for a growth stock like us. You need to start thinking of us as Lemonade, as Policy Bazaar, as Root, and not, and I can be very open in saying, you cannot look at us as Allianz, Syria Takaful, AXA. We are not them. We are very different. Yeah. We've tied up 58 digital partners in the last 15 months. Our chief partnership officer, since she's joined, has been pretty aggressive in building our business very aggressively. We have a new CEO in Malaysia business who again comes from a similar background. And we have similar heads in our Thailand and Middle East business and our reinsurance business. And these businesses are what we call really embedded insurance. For example, with InstaHome, you get landlord protection insurance. With Agoda, you get travel insurance, Agoda Indonesia. With MedSavers, you can buy PA on their platform. With Bijak, you not only buy motor, but on checkout, you can buy health. So they cross-sell, upsell. So we just launched with Doctor On Call a PA policy as well. So that is our approach to the market. We are going significantly dialing up, and obviously with AirAsia coming back, we've seen better traction in March and April. Obviously, that's also a positive development to look forward to. So we'll continue to grow this. And the reason why this growth is happening is because of three reasons. One, we are digital first. Two, we are API ready. We can go live with partners in days, not months, not years. You speak to insurers. I ran an insurance company myself before this. Most insurers probably take months to execute one partnership. We take sometimes days. As an example, when the Langkawi Sandbox was started last year, in September, October, I forgot, the announcements came in on a Friday evening. On a Saturday, we were informed we are one of the 3 chosen insurers. And Wednesday morning, we went live. 3 months later, none of the other insurers went live as yet at that time. That's the speed we work. We did it in 3 days. 3 months, traditional insurers can't do it. Okay. A lot of concerns around our expense ratio. Now, this one needs to be understood a little bit. First of all, on combined ratio, which is a very positive development, the group continues to be below 100%, which is very positive. But more importantly, our Malaysian business and our reinsurance business, both have very positive combined ratio. Our reinsurance business has combined ratio in the 80s. Our Malaysian business has a combined ratio of 93.4, which is very positive. The group obviously has a slightly higher combined ratio because we're expanding on several other things for which you will start seeing the developments, expansion, tech, etc. in the days to come. And you will notice here that the ME ratio has not moved, and you might wonder, oh, so then why didn't? The reason is very simple. In insurance, there's something called a lag effect. Your expenses or your commission, you have to take in full. What do I mean by that? 75% of your commission you have to budget straight away when you get a client. But the business you earn over 12 months. That's why your earned premium takes more time, but your expense hits you straight away. So that's why you will see a timing effect in the expense ratio. I'm absolutely convinced that our expense ratio will materially improve by the end of this year with the high growth we are witnessing. 77% growth in Malaysia is pretty unheard of in a quarter. Moving on, I think I will invite our CTO, Prashanta, to talk about our technology side, which is extremely exciting. Many people are not aware of our technology side. So Prashanta, over to you.
Thanks, Rohit. Good evening, everyone. So Rohit has spoken a lot about what technology can do, but I wanted to highlight one point. In every company, whether it's insurance or any other industry vertical you consider, technology or IT is not in the P&L. They are only on the cost. They will only consume. We do consume, but what we did in last 2 years, we built a platform which we are now ready to monetize. Now, if you look here, there is Mars and Zeus. Zeus is an older version where we used to do travel tech. And Mars is the new version which does travel tech, it does other PAs, it does health tech, it can do life also. So this March, what we have built, we are now ready to monetize. And just to give an example, you all know InsurTech as Cover Genius. Cover Genius has done 5 rounds of raising money. The last one was 100 million Aussie dollar probably. They have generated last year 10 million policies, and compared to us, where we have generated 8 million. The good part of us is we are not a software house, so there is no sales target. And the platform what we have built, we know that if it works for us, it will work for the rest of the world. That's the bottom line. So this platform has a composable architecture. What does it mean? It is modular. It has orchestration. It has API. And we call it InsurTech in a box, which means you can distribute also through this platform. But is it a core system? It isn't. So we go out, what we have found out that in the market, people, I mean, insurers have very old legacy core system. And that's not something, you see it almost everywhere. So people very seldom upgrade their core system, but they want to move into a digital platform. So this is a digital accelerator which sits on the top of the core system, and it has its own all the bells and whistles which can generate its COI. It has all the APIs, and as a result, we could generate 500,000 policies for Tenang in a day. And most importantly, it is cloud native. So which means if someone wants to host it in a cloud, we are ready for that. If someone wants to host it in a on-premise, we are ready for that. And more importantly, we are also working on our mobile app. This mobile app, which was running for Malaysia, we have launched for Thailand. And now we are working on the health tech part of it. Maybe in 3 months of time, you will see the health tech enabled mobile app. And what it does, it will increase the engagement with the retail customers out here. In the last quarter, we had activated 3 markets around this using this platform, and we're going to generate tech fees around it. The important part of it, what we are trying to say here, this business will grow because we have got the pulse of the market that, okay, everyone is kind of in a similar path that they cannot modernize their core system, but they want something to go digital. And this is where the Mars platform comes in and supports. But it's not only Mars, it also has a distribution platform. So which means you have to distribute your products. Like in Middle East, 2,500 travel agents across Middle East use our distribution platform. And when we are doing it, InsurTech as a service, when I call it, what it does, it has a product configurator, it supports parametric or users-based insurance, embedded insurance. Some of the modules are built on low code. It does have some automated underwriting, some kind of machine learning on dynamic pricing, and it has a flexible payment system. Of course, claims are also there and the reporting part of it. Over to you, Rohit.
Prashanta, there's one question for you. I think I did briefly talk about it at my introduction that we already have 3 clients beyond TuneProtect. But can you give a little bit of how it works? What's the model? Can you talk about it? The question is from Wen Senchu.
Sorry, let me just have a look. I can't see that question.
Okay, will this tech arm provide service to other company beyond TuneProtect Group and subsidiaries?
Yes, it is already doing it. What we won't do, and that's our management decision, we won't give it to any other insurers in Malaysia or in Thailand where we operate. So we are licensed operator in these 2 markets. We are not going to give out our competitive edge, but we are ready to give out in other markets, whether it's ASEAN market or in the Middle East market where we predominantly run a brokerage house out there. And we are already doing it. I mean, in coming days, sorry, not days, maybe coming weeks and months, you will see more announcement around it, what we are doing. Currently, we are working out on the final stages of the contracting. So I don't have a privilege to say on the client name, but you will see where we are going to give the platform, not for travel, but beyond travel also, other PA products and all.
Okay, thank you, Prashanta. Appreciate it. But just to let you know as well, right, when Prashanta very loosely talks about comparison with Cover Genius, again, we are trying to ask you to look at us differently. Cover Genius recently got a several multi-million-dollar VC investment. They do 10 million policies. We did 8 million policies with our tech. So that should give you again an example of how you should be looking at us as an organization. Moving on. Okay. We did talk about expanding our business. On the M&A side, we continue to look for opportunities in Indonesia and Vietnam. That is something we are continuing to explore, but obviously we don't have anything material to update you. But as I've said before, our strength will be if we expand our tech across multiple markets. That's when the real benefit of our tech will come to both the company, but also the market, but also from a valuation standpoint. That's something we are definitely focusing on. We are expanding our Vietnam business through our strategic partnership with Viet. We tend to take quite a significant business portion there as well, and we expect Vietnam to become a decent size of our business in the months to come. We already work with the second largest e-hailing company where we sell travel delay. We geotag travel insurance, which means when you're reaching the airport, we remind you if you want to buy travel insurance from us. We work with a leading e-wallet provider in Vietnam. Again, we have travel insurance with them. We work with Bamboo Airways. We have started working with a popular online travel agent. We've started selling home insurance to or rental insurance with Shopee. And we are now working on the largest e-commerce player, marketplace player, digital payment player, and also we are hoping to announce another travel partner in the days to come. Okay, moving on. Okay, I think there was a question asked as well. This slide ties in pretty well on our mobile first approach. First thing is we develop our products with a mobile phone in mind. So naturally it becomes simple to buy. As you know, we have a commitment of 3 minutes you can buy from us. So that's something clearly we use to explain. On the question that is there in the window as well from Mr. KS Lu, if you look at Google App Store, P&O has 50 plus and we have 5K. How do you evaluate this, etc.? Well, first of all, we haven't spent substantial money on the mobile app. Just for your record, we haven't. It's nothing when you compare to what other companies spend. But coming back to the point, we have been growing the mobile app organically. What do I mean by that? We have not done any campaign like we give you free PA, we give you hundreds of ringgits of vouchers if you download our app. None of that. We haven't done any of that. I'm not saying the competitor you mentioned is, but I know some other companies are doing it. Why are we not doing it? Because we have different phases of the mobile app development. First, we had a mobile app. Now we've expanded the mobile app to Thailand as well. So Malaysia and Thailand uses the same mobile app. And what we are doing is by Q3, we will have a health tech up. When the health tech is up is when I am more confident. Why? We will have things like you wake up in the morning, I will send you a push notification which says, hey, if you walk 10,000 steps today, I give you 5% off on your next month's health premium. Or if you sleep 6 hours, I give you a discount. So we can do quite a bit of health engagement. In Q4, we expect to have a motor claim and telematics proposition, a newer one. We already have pay as you drive. So what essentially will happen next year is we can do hyper personalization and hyper customization, which I've talked about earlier. What that means is I know your driving data, I know your health data, so I can give you extremely impressive discounts and propositions if you share both the data with me and you're engaged. So that's where we are going. Watch out for our health tech and motor tech propositions in Q3, Q4, and Q1 of next year. That's when the real mobile adoption will happen. I am against the concept. We might give some, at that time, we might give customers something, a way to engage them to download the app and use it. I am against just downloading an app for the sake of it and not having any engagement. I have seen too many such examples where there are thousands and thousands of download, and then it just falls away because there's not enough engagement. Okay. Moving on. We are seeing our e-commerce business improve significantly. Our Thailand e-commerce business grew 12x in Q1. Our Malaysian e-commerce business grew 8.5x. Our conversion ratios have improved significantly. Travel conversion ratios between 7 to 15%. Most of you who might know digital marketing will tell you that these are very impressive conversion ratios. Even 2% is not bad if you ask me, which is motor. But again, that's something we are looking at. So we are now, you can see we are more and more improving our search engine ranking, SEO, SEM. We are looking at things like bounce rates, loading rates, customer feedback. There are several angles we are looking at to constantly see how we can improve our business. Yeah. So these are matrices we track. For example, for our e-commerce head, his number one KPI is customer has to buy in 3 minutes, not sales. Why is that? Because we want the right experience. The sale will happen because of that. So that's the kind of method we follow. CX, you know that customer experience, or NPS, which is Net Promoter Score, is negative for insurance industry in most countries. In Malaysia, it is negative. Our overall NPS was minus a year back. It moved to plus 14 in December 2021. We hope to move to plus 17. Our own sense is by next year, we should be in a leadership position. We do believe, like, when you go to a lemonade does not say we want to be number one in the market. Lemonade says we want to be the leader in customer satisfaction. And that's something definitely we want to be as well. Our partner NPS at 78% is probably unheard of. It really is unheard of. If you look at our Q1 matrices, we had 1.5 million unique customers. We had an average active policy of 1.22. A customer vintage of 30 months is pretty interesting. For many of us who think we are a travel insurer, you cannot have 30 months of vintage. So that tells you our business model is evolving. People are buying more products from us, and they're buying more longer term products from us. And our average premium is 136. And this is something every quarter we're going to report back, so you can see the evolution of the numbers. We are completely changing our employee branding proposition. We're hiring a lot more younger people, freshers. We're focusing a lot on interns, management development. We are completely agile. We actually gave up a floor this year. We didn't need 3 floors. We just have 2. We have fully agile. Nobody, including me, have an office. We casual dressing, all days a week, flexi working hours, flexible working arrangements. Some of our tech people, are all over the place. We're setting up a team in Vietnam. We already have people in India. So that's something we're constantly looking at. So we do want to have the right culture, an exciting new culture for our employees to work in. And it's something, there's a lot of great work that Sui and Faiza and Isma and team have done. And happy to talk more if you need to. Obviously, ESG is very, very important. I'm very happy to say that we are already inducted into FTSE for Good, which is fantastic. It was a dream for us by 2023. So now the dream is to stay there, right? We are the only insurer in FTSE for Good. Please, it's a fantastic achievement. We will be zero coal. We have introduced a charity element. So for example, if you buy an e-commerce product from us today, except travel and PA, we give 6 ringgit to Yaya San Chowkit. So we are embedding charity into each of our policies. 50% of our leadership team will be women by 2023. It's 37% today. It's improving continuously. Our board composition is also very impressive in terms of women. And we also have a promise that 50% of our critical successors will come from within. Because when I came in, one of the things I didn't like was the fact that we needed a new CEO, new COO, new CTO, new CFO. It doesn't augur well for the company. As investors, you would like to see continuity. So that's something we are building, the talent depth as well as an organization. I'm going to invite our CFO, Hao, to talk about the financials, and then I'll go into a few other slides. Hao?
Yep, sure.
Hao, after you finish your presentation, there are a couple of questions there which are finance related as well. So if you can take them as well, that'll be good.
Okay, yep, we'll check on that. So sorry, I'm not taking on my video because I'm actually parking my car along the roadside. I'm taking it from the car. I just was running a bit late. I think didn't manage to reach home.
No worries.
So okay, just quickly, I think going into the numbers, I think pretty much as what shared by Rohit as well. I think we actually have achieved quite a commendable growth. I think in the first quarter of this year, with our net return premium growth by 37.2%. I mean, close to about 40% growth. However, I think on a net earned premium, based on accounting recognitions principle, that not everything can policy sold can be considered earned. We have to earn over the month as the policies, I think, matured. So the amount of revenue of this growth in our premium that flow through to our revenue top line in our financial is so far basically at 11%, 10.9%, with the remaining, I think, to be recognized over the coming months and quarters. Underwriting profits, basically, you notice that basically is pretty much, I think, maintained. I think previously 0.8 to 0.1. That is actually also just to recap, I think, what Rohit have shared, because under the accounting recognition principle, your acquisition cost, basically, you will need to recognize upfront because it's under different contractual obligations. So we will have to actually recognize, I think, the cost, I think, in the acquisition of those growth. Hence, there is a bit of mismatch, I think, under the accounting recognitions. Not all the top line growth basically translate into profit, I think, in this quarter, but they should be coming in the subsequent quarters. I think you also noticed that maybe, I think, overall, I think in our loss after tax positions, it has actually narrowed down significantly from 20.5 million loss, I think, last year, similar quarter, to 2.6 million. I mean, predominantly, I think this loss, I think, was driven, I think, by two main factors. I think one was actually sheer result of our Thai entity due to COVID claims. And basically, there is actually some loss in our investments, in especially on our equity investment, which I will cover in the subsequent page as well. Yeah. If we move on to the next slide. Okay, as you can see here, I think on our investments, basically, we actually adopted quite a conservative, I think, investment portfolio mix, with actually only up to 8% of our total portfolio that we invested in equities funds. However, I think in quarter one, despite that, basically our total exposure of 8% in equity funds, and specifically within that, I think we are talking about approximately less than 2%, I think, in the Greater China funds. We were actually adversely impacted, I think, by the China lockdown because of the COVID outbreak. Hence, I think caused our investment, overall investment return, achieve a marginally 0.2% negative return during quarter one. We do observe our fixed income portfolio to stabilize and start basically generating a positive yield in quarter one of this year. Sorry, I'm trying to jump on maybe to some of those questions. Just give me a few minutes trying to
Oh, let me
route
read.
through it?
Let me
Yeah.
read the question. Maybe it's easier that way because it's
Okay.
difficult to present and read. Okay. The question is, have the investment arm of the company been underperforming? What is your plan to generate higher investment returns?
Yeah. Okay, we did a benchmark, I think, on our investment performance actually with other funds performance. Maybe three main things to highlight. I think the first one is basically our investment basically are still predominantly, I think we invest through funds that are managed by professional fund managers. When we actually compare or benchmark our performance against maybe competitors or other funds, we do believe that basically our performance are actually on par, or actually maybe half our portfolio are actually outperform actually some of the other in the market. However, I think during the last year especially, I think that one of our funds that we invested in do suffer from a max to highway bond default. That was one of the, I think, the factor that actually bring down, I think, specifically on the specific funds, why it bring down our overall investment return, as what you can see relatively, I think, to if you were to do a simple comparison against others. And the outlooks, I think, what we maintain, I think, is from the current, I think, yield curve that we observe, I think we do see that basically for the US, I think the amount that has already been priced in was almost equivalent, I think, to about 300 basis points, I think, of rate hikes that have already been factored in. And maybe I think for Malaysia, it's about 125%, I mean, basis points rate hikes. So we do believe that basically a significant portions of actually the rate hikes, I think, impact has been factored in, I think, by the market. But we will continue. However, we believe that we'll continue to see market volatility as uncertainties are still lingering in the market. But the positions basically that have been adopted remain that we see those as short-term volatility, and it would not actually impact in our longer term or medium terms returns. That is still basically what we are still adopting, maybe more like a wait and see approach and we will only be actually maybe start doing a more drastic shift before that, because just to highlight to everyone, we have actually already shifted our average durations from on average of 5 years fixed income, I think, portfolio to actually now range from 2.8 to 3 years. That is actually to minimize the volatilities into our book as well, and we start to see the result of that in our Q1, which we have significantly narrowed down any negative impact from our fair valuation loss.
Thanks. Next question. Are your equity, it's from Mark Lim, are your equity investments managed in-house or outsourced? If latter, could you share which fund house it is?
Okay, it is outsourced, I think, to two separate fund house. One is actually for Asia Pac equity, and then the other one is actually for Greater China funds. Yeah.
Okay. The next one is an important one. TPT Q1 losses result from Omicron claims. Have we, I don't know, if stopped all relevant products? Does it mean there is no more COVID products in TPT going forward? Any change to the other countries' COVID products? So let me answer one part of it and maybe how you can answer the other part. We did have losses in Q1 from COVID health product. This is a question from Shi Chao Tai. We did have a loss in Q1 from a COVID health product in Thailand. We have already mentioned the market that our exposure remains till July this year. Okay. Having said that, our COVID travel products are extremely profitable. So we have growing COVID travel portfolio in Middle East. We have it in Cambodia. We have it in Thailand. We have it in Malaysia. And we have it in Vietnam. It's very profitable. It is only one product, which is COVID health product in Thailand, because of the generally high loss ratios that were there. Okay. Anything how you would like to add to that?
I think maybe just one thing. I think for the specific lump sum coverage, basically we have already stopped that. I think in May last year. Yeah.
Yeah, October last year.
Yeah.
Okay. I think, yeah, I think that's your, sorry, there was one on dividend on the EMEA, there was an EMEA dividend question. I think maybe that's gone. Here it is. From Shi Chao Tai. I think, again, this is probably an understanding question, and that's why it's important. Why is TUNEPRO foregoing its dividend entitlement from EMEA in 2021? Did we get anything in Q1? Will we ever get any dividend from EMEA going forward? Can you answer that?
Okay. I think maybe to put it into context, I think maybe is if I come from a more layman term, is that we do not forego actually any of our interest in the Middle East. Basically, what we have done since last year was we changed the way where we share the profits in the Middle East business. Previously, I think prior to 2021. Our share of Middle East business was recognized through dividends incomes flowing into Protect Group's book. But since 2021, we have changed the recognitions method to better reflect the true performance of our reinsurance business, meaning that our reinsurance business that undertake the risk for Middle East business, that we have retained our share of profits into our reinsurance business book to which is above the line, above the combined ratio line. And because of we have already retained our rightful shares of the Middle East business, so we then allow basically for the balance of this 51% of the business profits to be then recognized by our partners and not actually double counting the effect in Protect Group's book. I'm not sure whether that's a bit confusing. Basically, in a nutshell, we still continue to recognize the profits, I think, from the Middle East business, but just that it has changed now from the share result lines and move it on top as part of our underwriting business combined ratios profit. Hello, should I elaborate further, or is that something
Thanks,
that's
Hao. I think
clear?
it's okay. In case they do have follow-up, then you can come back later and we can answer. Yeah. Okay, thanks, Hao. I'm going to move on. Okay, moving on to the next slide. I think this is just an update on TPT for some of you who may be concerned about the claims there. The business has grown by 125% year on year. Lifestyle business is up 2x, health business up 8x. So you can imagine it's all business that we want. Yes, they've been affected by COVID claims, but I do believe it's a short-term phenomenon and the business will come back quite strong, particularly with the growth and the 22 new partners we have who have 65 million customer leads. Okay, I think there's a question from Sean Chua, which will be answered with this question. TUNEPRO has been performing relatively poor. I disagree with that statement vehemently. If compared to other listed insurance companies, depends on what is your definition of performing poorly. How is TUNEPROTECT different to other players? Its growth is nothing close to InsurTech's. So here you go. TUNEPROTECT Malaysia grew, well, its GWP grew at 39.5%. Its NWP grew at 77%. Thailand market, our business grew 73%. What did Lemonade grow? 45%. What did Root grow? Minus 7.5%. What did Policy Bazaar grow? 42%. You can see our growth rates are significantly higher and comparable to the large listed insurtechs. I can also go to the extent of saying that, I'm very confident, as I mentioned before, that we will be on the higher end of the 25 to 33%. And you will see that in the days to come. all of these companies at this point are loss making, but from a, eventually it's about making money as they get more customer data. It's the same with us. We are fundamentally transforming our business. Our price to book at 0.6x versus all of them, Root has had several issues. But if you look at the others, they're significantly higher price to book than us. So that also should give you a sense of, where we compare vis-a-vis the market. And that's why I think we are not being viewed for who we are, but I'm hoping in April, we again had a very strong growth rate, keeping the 77% growth we had in Q1 for Malaysia. Okay, moving on. I'll give a summary and then I'll go to Q&A. Our Malaysia business in Q1 grew 77% of net written premium. Our Thailand business grew 2x. In April, we saw even higher growth in Malaysia. Our Middle East business grew 6x in 2 years. Our diversification is happening with our partnership in Vietnam. There was a question asked by Mark Lim. How do you conduct business in Vietnam as TUNEPRO does not have a license there? We conduct business through a strategic partnership with Bao Viet. And this business comes back into our reinsurer. We have a higher portion of reinsurance. Mr. PK Lim has asked the question as well. Do you mention about Reinsurance Segment? Can you explain about it? So we have a reinsurance company called Protect Reinsurance. So partners like in Vietnam reinsure back into our TPR business. The beauty of our TPR business, which is a lifestyle reinsurer, as you saw above, they do health lifestyle SME. They don't just do travel anymore, which was essentially initially set up as an AirAsia reinsurer. But that's changed significantly. We're not just travel. We, in fact, did a little bit of business in Q1, Cambodia, health. We did a home insurance business. We did a vaccine insurance business. So we're continuously changing. And this business is done through the strategic partnership. And that's how we got all these partners that you're talking about. The second one, so you can see our biggest difference is we have an insurance and reinsurance business both growing. And we are extremely innovative. I can tell with a lot of confidence, there is no insurer faster than us in any of the markets we operate in, as simple as that. Anytime there's an RFP, we are able to go much faster than anybody else. We are a tech-led business. Our in-house tech is today utilized across 60 markets. We have a proven travel tech platform, which is used across many markets, 60 markets. We've now re-architected the travel tech to cover all other businesses, lifestyle tech. It's active in 3 markets. Vietnam going to happen soon. It's a fully cloud-enabled system. So in countries where cloud is allowed, we have it. In Malaysia, you all must have heard, we are the first insurer to get cloud approval. In fact, we've been on calls with insurers and banks who are asking our advice on, how we got this. We have extreme confidence in our system. We're able to issue 500,000 policies in a day. We are re-architecting our mobile app. We had 1.5 million customers. Last year, you saw we had 8 million in a year, which was COVID. We have given 3 commitments to the market. You can buy from us in 3 minutes. We will respond to you in 3 hours working days. And we will pay out retail claims. Motor obviously is different. It's garage. And health is cashless. There is parametric travel, where in Vietnam with the largest e-wallet, we actually pay claims to you even before you claim with us, because we get the data of the flight and we are able to pay claim instantly. We will be launching that in Malaysia and Thailand in Q3 this year. But we have a 3 working day commitment on our claims. During the recent floods in Malaysia, 91% of our claims was paid within 3 days. Okay, so that's really, if you ask me, the investment story. And someone had asked, saying, why should Raj Kumar Perianan had asked, could you provide key reasons why customers would buy from TUNEPRO instead of your competitors based on your unique value proposition? I think it's very simple. The first one is we are built around millennials and zillennials. So we think about millennials and zillennials. all the products we launch are millennial, zillennial friendly. Just like AirAsia sells a ticket, and then what seat you sit in and what food you eat is up to you and you pay for it. The same way our home product, our health product, everything was created with that proposition: simplicity, no frill product. That creates the growth for the business. And that is how we are funneling the whole story for us. And that's why we want you to come to us. We are digital, we are fast, we are nimble, we are quite innovative. And that's really the approach we have taken to differentiate ourselves. I'll give you three simple examples. You today have more than 12 products from Protect you can buy online. Can you find me many other players who can do that? Two, when the COVID situation happened, we were the only insurer to have a direct-to-consumer proposition to buy travel insurance. All the others had to depend on other distributors to do it. Three, we are able to make statements like, if you find a cheaper home insurance product, we will make good your difference. Why we are able to make that commitment is because we are digital first, e-commerce ready, and we focus heavily on simplifying our products. So that's really our differentiation. Shane?
Yes, I'm here.
So do you want to go through, there are quite a few other questions as well.
Yes, we are. I think if you have concluded your presentation, then we will proceed to the question and answer session.
Sure. I tried to take a lot of the questions asked because many of them
Yes.
tied into the theme. So
Yeah, I think you did it just perfect. All right. So if any questions to ask the senior management of Protect, please write in the Q&A box and we will address them accordingly. Don't write in the chat box so that we won't overlook your questions. All right. I think Rohit have also addressed many relevant questions along the way as you navigate across the slide. So we will just take some other questions that haven't been addressed yet. All right. So I think this is a question that many investors feel that it would be a pertinent question to ask. When do we expect that a turnaround of TUNEPRO into a quarterly net profit?
good question. First of all, I think that's a bit of a forward-looking statement. So I have to be careful in making that. I think the key for all of you to remember is I am not looking at quarters. I have given the market a 2023 story. The 2023 story is we will grow significantly. We will retain more business. Our tech will be used in more markets. We'll acquire more customers. They'll buy more from us. We'll focus on 3 segments which are most profitable. We are committing that our combined ratio will be obviously, below the line. And obviously, we are saying that we will continue to, build our business in these 3 lines, which have, net positive underwriting contribution. I'm not going to, go by quarters to say, which quarter is, what's going to happen. Because I think right now our focus is, there are many ways I can just, ring the bell and create profits. But right now we have to achieve our 2023 ambition, which will take the company to where we all want the company to be, which is the leading insurtech in ASEAN region.
Okay, thank you, Rohit. Ricky would like to ask the next question. How is the response of travel insurance since the reopening of the international border? What is expected revenue from the travel insurance segment?
Okay, so I think first things first, I think very important that please don't look at us as a travel insurer. We are a lifestyle insurer. Yes, travel is an important part. Like when I started off, everybody said I will live and die by AirAsia, right? AirAsia is a very important partner for us. I am so happy I have them as a partner. But you need to understand that last year, our net written premium grew 19.5%, despite AirAsia being less than 4% of my total sales. I grew 19.5%. In Q1, I grew 30-odd%, despite AirAsia being less than 10% of my sales. So I think it's very important to understand, and travel is less than 1/5 of our sales. Yes, travel will grow. Yes, we want travel to continue to grow, but it's not just about travel. Now, coming back to the question, of course, we are seeing an improvement in March and April in the travel side, especially with AirAsia. But we are also seeing a new trend in the Middle East, where we are seeing a 30% increase in first quarter in our number of policies, but our average premium has decreased significantly. The reason being people are no more buying COVID policies. The fear is going away. So obviously we are covering more people, but the average premiums are going down. Last year, it was the other way around. We were covering lesser people, but everybody were buying hefty policies because they wanted very high COVID coverage. So the models are also changing. So we can clearly see that, travel is coming back. We remain extremely positive. But as you saw in first quarter, we had a very strong growth of PA, strong growth of motor, strong growth of lifestyle, strong growth of other businesses as well. So that's what we will focus on.
Thank you so much, Rohit. We have two attendees here who asked a similar question, which is when do we expect TUNEPRO to be able to pay dividend?
Okay. I think on the dividends, I think it's always a question that the board should answer, because it's normally a board prerogative on dividends. I don't think I can give any market indication on dividends because it becomes a guidance. All I can say is this is something that the board will deliberate. Right now, my focus as a management team is to build the blocks to drive growth and become an insurtech, become the Lemonade, become the Singapore Life, become the policy bazaar of Southeast Asia and Middle East, and that's my focus.
Okay, I see. Patrick Lowe would like to ask the next question. Does TUNEPRO distribute your product only via the digital channels?
Great question, Patrick. No, we go where the customer wants us to go. In Middle East, it's only digital channels. Our reinsurance is only digital channels. In Thailand, it's heavily digital channels. Even the brokers we work with, they distribute our digital products. In Malaysia, we do have an agency channel which is growing, and a lot of the commercial line business will be sunset. As an example, last year digital for Malaysia was probably less than 20% because AirAsia was quite small. When AirAsia was bigger, it's much higher. This year in Q1, digital for Malaysia is about 60+% of our sale. And my own sense is it will go up even further as our large commercial business wears down.
All right. So thank you so much for addressing the questions. The next question is, does the management set a minimum target for combined ratio by financial year 2023?
We want to be below the line, as I mentioned before. But for our entities like our Malaysian entity, we want to be closer to the industry level. What will happen, as I've said before, is as we diversify away from travel insurance, travel will continue to be an important part of our business. You will see three important trends in our combined ratio. First, our expense ratio is going to improve significantly. I also believe our current expense ratios are unviable and it's unacceptable. So you will see our expense ratio materially improve. I would say significant improvement. You will see our claims ratio deteriorate. Deterioration is very relative. It doesn't mean loss making. Let me explain why. Travel insurance claims ratios are below 10%. Personal accident claims ratios are between 45 to 51%. Is personal accident profitable? Of course it's profitable, right? But is personal accidents claims ratio worse than travel? It is. So that's why you will see some deterioration of our claims ratio. And you will see some deterioration of a commission ratio, because as we get out of the large commercial business where we're getting a lot of reinsurance commission, obviously the negative effect of the reinsurance commission goes away. So our commission ratios will go up, our management expense will come down, and our loss ratios will deteriorate. Overall, as I said, we expect our combined ratio for our business in Malaysia to be closer to the industry average, and for the group to be below the green line.
Thank you, Rohit. Now I understand that you also have you also transfer some of the risks to the reinsurers. In what kind of policy do you decide to transfer the risk to the reinsurers?
So we only transfer when it comes to large commercial large commercial business, because we can't really hold it. So we've been heavily reinsuring there. If you look at our large commercial book, our retention ratios are less than 5, 6, 7%, mostly reinsured out. But if you look at the other businesses, if you go to my slide, give me a minute. Yeah, if you go to this business, you can see on the health side, we already retain 98%. Lifestyle is 85% and SME is 69%. So in these three segments, SME is the only one probably we reinsure a bit. For commercial, we reinsure heavily, but as we get out of commercial, you should see improvement on that.
Okay, thank you so much, Rohit. The next question is by Wing On. Are your fire products, especially the home insurance, de-tariff products? And how much discount from the tariff rate? Is it 30 or 40%?
Yeah. So a couple of things here. Fire is still tariffed, as you know. It's plus or minus %. But we have got an approval from Bank Negara, and we are at 40% below tariff for certain segments.
Okay, thank you, Rohit.
So our home insurance, if you buy through our partners or online, you should see a significant improvement.
Okay, thank you, Rohit. On the management expenses, do you expect that to be going up or is going down in the coming quarter? So that question is by Lou.
I don't like answering quarter questions. It's too much of a leading indicator for me. But as I said, I expect our management expense ratio to materially improve by 2023. But this is probably one question I can say it will improve by the end of this year materially. Because I explained earlier, I think Hao also explained earlier, your expense, you have to take it immediately, but your premium you have to do, even though you get the amount, you still have to earn it over 12 months. So it's a bit unfair sometimes. As you saw, our NWP grew 34-35%, but our NEP grew only 10%, but our expense grew 15%. Doesn't mean we were spending more than we earn. It just is a timing effect of the premium coming through.
I see. The follow-up question by Wing On is that will SME segment one of your main target segment? Do you have any new products coming for the SME segment this year?
Watch out, Wing On. Watch out for Q4 this year. We should have something very innovative. Q3, Q4, you're going to have some new products coming out. Fingers crossed on all the approvals. We expect to launch a few initiatives specifically targeting SME. I think we have something which is fundamentally innovative, but because of that reason, it needs certain approvals. We are going through the process. Fingers crossed, I can launch in Q3, Q4.
All right, we'll look forward to that. The next question is by Jason Lee. I'm not sure if you want to take this.
I will answer this. No, as I said, no question is out of bounds.
Yes, I remember you said
I'm a listed company. So, okay. My remuneration package includes employee stock options. So does the CEO of the Malaysian business, but it's still subject to approval of the shareholders. In line with the market to be more entrepreneurial, we are expecting to announce some changes around our compensation, but those will go through the natural process which has to be gone through. At the right time, we will come to the investors. But I fundamentally do believe that management having more skin in the game is very important to be aligned with retail and other investors. I need you to know that in the last 18 months I've joined here, after every single quarterly result, whether it's good, bad, ugly, I have invested my personal money, which you would have seen with the announcements. The problem is every time you see it, you see a small amount. Oh, you only invest 20,000. But when you invest 20,000 over 6, 7, 8 quarters, it's a different story altogether. And that's my personal money, excluding employee stock options. So that's a commitment I have. That's a belief. That's a fundamental belief I have in this company. And I believe I want my management team to have that as well. So you will see something around that, but that's subject to a few approvals. And we will work on that.
Fantastic. All right. We also have a questions coming from YouTube. Is that what is the expected revenue from Vietnam within the next 2 years?
I can't give that figure. All I can say is it will become an important line. I think probably we can give more clarity on it probably towards the end of this year, because it's a developing line. We've got a lot of new clients and partners there. We can probably give you more of an indication probably by Q4 this year.
All right. The next question is, are the income from your in-house tech app based on commission? Are you able to share the commission rate?
I think I made a commitment to the market on 2 things last year. I said, slowly we will start giving you more information on customers and more information on tech. From what it was a year, 12 months back to now, you would have seen a lot more information. Now we are starting to talk about our tech, the fact that we have 3 clients, what we are launching, what systems. Similarly for customers, you're seeing the number. I have committed to the market that by next year, you will start seeing tech. Somewhere next year, you will start seeing tech revenues separately. All I can say is today we have several models, but one of the models is similar to what Cover Genius or Zongan or eBao Tech would do. We charge customers on a per policy fee basis.
Okay.
So it's a policy issuance fee.
Thank you, Rohit. Xu Chao would like to ask, will there be any impact from MFRS 17?
So we're expecting to have that update by July. Our MFRS project go live internally is July. So I think July, August, September. So I think in October October or November, I don't remember when the quarterly announcements will be. I think at that time we'll be able to give the market a bit more of an update. All I can say first level is generally the impacts for life and GI are very different. Prima facie, it doesn't seem very material, but I would still wait for the results of the official data to come through, which we are currently working on. And we will share with the regulators as well in July.
Okay. We have about 2 more questions on our Q&A panel, but I'm not sure these are questions that you are able to take.
I'll take any questions.
Yeah, because related to the share price. So the question is, why is the company always trading below the book value?
Actually, you should also tell me, Chong. Yes, I would love to know your views as well. If there are any, please share. We also are learning. It's a struggle we also have sometimes in the Malaysian market to explain to people why you shouldn't look at us. It's very simple. I can be very open here. How can you compare me with Syria Takaful, who has such a huge MRTA business, which is so profitable, credit life business? How can you compare me with Launpack, who has public banks, home business? It's a very different company, very different business model. So I think for Malaysia, InsurTech has been quite new. And I think that's where the markets needs to start looking at what's happening with Lemonade, Policy Bazaar, Root, those kind of companies. And I think that's why these kind of meetings help us a lot. where we educate, hopefully, investors to make informed opinion on us as well.
Okay. I think, Rohit, there have been a number of new emergence of new insure tech players such as Policy Street. Not sure if you have
we partner with Policy Street. We do partner with Policy Street. We use them. Policy Street is Malaysia based. We use them, but we partner with many other insurance. We partner with Boltec. We partner with Boltec in Thailand. We partner with Cover Genius in Indonesia and in Thailand. We partner with Igloo in Vietnam. We are partnering with eBautech. For us, we will work with whoever brings us an opportunity, right? Whether you want us to be a product provider, in which case they provide the tech, or whether we provide the tech and the product and everything, that for me is incidental.
Okay, so they become your distribution partners.
Yeah.
All right. We also have one last question by Yesai, like, how do you make more sales since insurance is not something that people just come to buy?
It's a great question. I love these kind of questions. I think two parts to this, Yesai. I think insurance is going through a change. High net worth customers or mid net worth customers were the customers that most companies in the past spoke to. What do I mean by that? Because by nature, the margins were higher, so agents, banks, etc., focus on these customers. Mass customers cannot be addressed by these traditional channels. And that's where digital modes of distribution helps. Now, there are two parts to this. One is what I call standard products, motor insurance. People need it, people will buy it. Question is, can we make my experience as simple as possible for them to buy? The second one is what I call embedded frictionless insurance. Like you go to a telco, you buy insurance with the telco. You go to doctor on call, you want a COVID protection along with your doctor on call package, you buy it from us. You buy a test kit, this was during COVID times. You want a protection, you get it with it. So I think embedded insurance is, like we did in Vietnam with the ride hailing company. We embedded insurance where as you drive to the airport, if your flight is delayed, you get a reminder for travel insurance. If your airport is nearing, you get a reminder, hey, did you buy travel insurance? We noticed you're going to the airport. You say, yes, you get travel insurance. So that's frictionless insurance. My own view, this is anyway the crazy side of me. My own view is that insurance will become like an electricity bill in the time to come. What do I mean by that? At the end of the month, you will get a bill which says you drove your car for 1,000 kilometers, 800 was very good, 200 wasn't great. So this is your premium. Based on your wearable data, this is how you took care of your health. So this is your premium. Based on your travel data, these are the places you travel to. This is your premium. I think IoT connected concepts open up a whole new plethora of opportunity. That insurance can fundamentally change from being pre-underwritten to actually being sold based on actual usage, which is being done partly. There is some usage-based insurance everywhere, but I think there is an opportunity to bring it all together like an electricity bill. So yeah, I fundamentally believe the new generation consumes insurance very differently. If you go to them and say, I'm going to sell you the most comprehensive health insurance in town, they're not going to trust you. They're going to find it expensive in the income they're earning in their early years of their career. They'll find it very complex and they'll walk away. But if you go to them and say, I will sell you a one critical illness, or I will sell you, PA with something else you're buying, I will sell you dental cover only, it's a different conversation. Simplicity is very important for this generation. Trust is very important for this generation. You will see I'm very active on social media, not by choice. It's by design. Why? Because this generation has to see us. So when people complain, you actually will see me respond to complaints why actually I've even gone and made customers who complain. Because yeah, you can see me all the time on social media responding to customers. My team feels a bit uncomfortable, but I put myself out there, and that's the culture we have in the whole team. The new CEO of Malaysia was telling me the day he joined, I think 2 or 3 days after he joined, he was attending calls or he was in the call center. That's the culture we want to build, because I am not claiming to be perfect. To anybody on this call, if you think I'm perfect, I'm not. I'm extremely imperfect. But I think that's the beauty I bring to the table as an organization, that I'm ready to learn, I'm ready to be nimble, I'm ready to be agile. And I don't know what I don't know. 18 years in insurance. I remember having this conversation last year. We launched a product which had a press conference, big launch. I thought this product is going to do very well. It sold 31 policies, just 31 policies, and it failed, right? This year in November, we were talking about another product and I was not convinced about it. But my chief of sales was pushing, no. She was convinced. We launched it. In February, in 1 month, we sold 120,000 policies. Now, it tells you, A, that I don't know my customers yet. B, it also tells you that we are all learning, what works and what doesn't work. We got to keep trying. We got to be innovative. We got to be different. We got to be nimble. And we got to have that culture of trying. So that's essentially what it is. Sorry, a long answer, but I think it was a very interesting question.
Yeah, I like your answer. I also love your commitment to the company.
I do see a couple of hands up, so I don't know whether that's
Correct.
a mistake or.
We also have a question from YouTube by Ali. Are you willing to let go of some premium for market share, or you would rather abstain from writing unprofitable contract?
Okay, that's a very good question. I'm not a cowboy. In insurance, you don't. The easiest thing to do in motor and health is to grow market share and go belly up. So I am not going to be doing loss leading business. Having said that, there are two things. One, it does not mean that by me saying I have the cheapest product in town, that product is loss making. No. It just means the percentage is smaller because the ticket size is smaller. So the absolute number is smaller because the ticket size is smaller. For example, average health premium for me is 600 ringgit a year. Average health premium, if you buy through traditional companies, is anywhere between 1,500 to 2,500. So obviously it's fundamentally different. I still make a margin, but it's a margin on that. But I have certain controls. Traditional companies have as charged, which means you can use the whole limit. For me, I have inner limits. That's my way of controlling. The second part to this conversation is we will make mistakes. And that's the whole beauty of being a digital insurance company. But we limit the mistake to certain controls. For example, when we launch a really innovative product, we have certain controls that if the loss ratio hits this percentage, we'll withdraw the product full stop. Unlike traditional channels, I don't need to worry to speak to 10,000 people before I withdraw something. Here, I can just close the tab. It's just my website. I just take it off. You're never going to be able to buy the product again. So we have certain controls, underwriting, pricing, product controls that we have in place. So obviously, we don't do cowboy stuff. We walk away.
All right. I love your answer. The next question is by Wong. Is ZhongAn a competitor of Protect? ZhongAn has partnered with Grab in Indonesia.
I wouldn't, well, logically speaking, you could say they're a competitor, but I think they are at a very higher, very much bigger scale than us. They're talking billions, right? I read somewhere that ZhongAn spent $1 billion every year for 10 years or something like that. So how do you expect me to compete with, ZhongAn? I admire the company. I look at them, but I don't see any reason that tomorrow, if there's an RFP process and I have to compete with them, I will compete with them. It's a different point that I may lose out. Tomorrow, if they bring an opportunity, I partner with them, I'll partner with them. That's the beauty of InsurTech. If I may use a lighter joke, I may be playing a tennis match with them in the morning, which means like an RFP process, but I may also be drinking beer with them in the evening as friends, which means I partner with them. So that's the nature of the game.
And that has happened, Rohit. If you take Cover Genius, right? We were giving data points around Cover Genius in Thailand. We partnered with Cover Genius because they bought another partner, right?
Yeah.
Okay, thank you, the CTO presenter, for adding to that. All right, so it looks like we have addressed all questions, okay, on Zoom and also on YouTube. So, okay, I think, all right, so let's do one last questions by Fu. Since TUNEPRO is into travel insurance, to be innovative, why can't TUNEPRO offer alternative bundle with VPN and data package?
Thank you for the idea, Fu. We will study it. We do distribute with telcos, just for your record. We do distribute with DTAC, which is Telenor or Digi's Thailand company. We do distribute through TuneTalk. So we do look at those opportunities, but we can study this. Thank you for the feedback.
All right. So it looks like we have addressed all questions. So thank you so much to the senior management of Protect, led by the group CEO Rohit Nambia, in addressing all the questions and also helping us to understand your business model and also the growth drivers for Protect Group Bhd. All right. So allow me to share my slide. So for our next CanTrade webinar, it is titled Stock Market Outlook for the Second Half of 2022. Okay, it is happening on the 9th June 2022. It is next Thursday. So the time is from 8:30 to 9:45. So I've given you the registration link. So I'm sharing it with you again. So if you want to learn what is the outlook like for the stock market in the next half of the year, where we will also dissect the stock market outlook and economic outlook for the US market, and also we'll talk about the Ukraine and the Russia conflict crisis and analysis in this webinar. So please, if you are keen to learn all this outlook, economic outlook, stock market outlook for not only Bursa Malaysia market but also global market, please join us in the stock market outlook webinar for second half of 2022, brought to you by CanTrade. All right. So for those of you who are not yet a CanTrade client, if you're keen to open a CanTrade account, you may head over to this online form, which is www.cantrade.com.my/open-account-form to sign up your interest, and Kananga will arrange a friendly dealer representative to cater to your interest to open a stock trading account for you. So just head over to this link, www.cantrade.com.my/open-account-form. And if you want to get trading ideas, okay, from Kananga, you may join Kananga Trade to Win Telegram channel. I have also given you the Telegram channel link. You may join that channel to get trading ideas given to you by the licensed investment advisor by Kananga Investment Bank, so that you know, okay, where what stock could be put in your watch list and what would be the entry price and also the take profit level and also the stop loss level. All right. So with that, I would like to thank the senior management of Protect for joining us in this live chat with Protect Group Bhd session. Thank you so much to Mr. Rohit, who is the Group CEO of Protect. Thank you so much to Mr. Prasanta. Thank you so much to Janet, and also Mr. Hao Kim Lien. All right, the CFO of Protect. So thank you so much. So I wish all of you here have a pleasant rest of the evening. So we will see you all next Thursday. Bye, everybody.
Bye.